Hello, everyone, and hi, Abrak. Thanks for having me on. Why China? How did I get here? That's a great question. I am sort of a child of a different generation in the sense that I was part of FinTech 1.0, so to speak, which was the use of technology in banks for structured products and quantitatively driven finance in the 90s. So I ended up in China after the big crash of 2010. Frankly, the work that I did disappeared for good reason, and I won't. Let me put it in another way. The good news is that my products never touched mortgages and never cost people money. That's the good news. But still, the desire for people to buy and for corporates to buy highly complex, structured, mathematically based products ended with the financial crisis. And I ended up here because I literally had been here in 2003, loved it. And in 2010, China was the best economy going. And I said, I literally got on a plane, had two large duffel bags, and that's how I got here. There was work, there were interesting things going on, and I'm a little bit of an adventurer, to say the least. And that's how I ended up in China. And it was for me a transformational move because not only did I escape, I specialized in EU and US, obviously, finance. And I crossed the Pacific and now became an international finance guy, but in the Pacific Basin, which is really so far away intellectually. The miles are immaterial, but culturally, intellectually, how things work here in China and in Asia overall is very, very different. And we're seeing that now through things like RCEP program, the Regional Comprehensive Economic Platform, or I can't get the acronym right, but we're seeing how different Asia is to the rest of the world.
And that, ladies and gentlemen, is how Richard Turrin ended up in China. Thank you so much for that wonderful introduction, Rich. Well, everybody, hi, you're listening to Money and Me, and I'm your host, Abhiraj Bhattacharya. And today, our episode is taking us far away, way into China, into the hearts of China, where Richard Turrin has been there for the past 10 years. He's been doing incredible innovations in fintech over there. And his recent book came out, by the way. It's called Cashless. You guys should definitely read it out. Well, of course, we'll be discussing it on the show as well. But bottom line, oh, there it is. There the book is.
There it is. How can I never do an interview without a book present? It's always beside me. So there's Cashless, and it's available on Amazon. And actually, the funny thing is it's got a QR code that actually works on the cover.
That's splendid. That's way miles ahead. Great job on the QR code. All right then. Okay, let's start off this interview then. I got some great questions for you, and I'm really interested to know your reply. Because what happens is, Rich, we often ask questions about China to a lot of people, but since they're not in China, even though the answers are pretty fine, it doesn't feel like an authentic enough answer. But since you have been living there for the past 10, 11 odd years, I think you're very qualified to answer these questions. So here comes the first question. Let's talk about the book itself, since you brought it up. So Cashless, China's Digital Currency Revolution. So it was released in April, I believe, April this year.
Yes.
And it got some great reviews all over the world. I was going through the Amazon reviews as well. I went to Amazon.com, saw the reviews. Turns out people really loved it. Now, my question, which I believe a lot of my viewers would also want to know, is how do you end up writing these books? Like, how does an author like yourself begin to write on such a topic? Like, take us through the process.
Sure. It's a big book, and it ended up being, I think, 500 some pages, which is a little in paperback form. 400 pages in paperback. And the reason is because it's such an expansive topic. So how I got into it was very simple. I'm a product of a banking background for the majority of my career in the US and in the EU. And what I saw happening in China with regard to digital payments, what I call the version 1.0 payment, which is WeChat Pay and Alipay, was so mind-blowing that I thought it was an important story to tell for the world. Because frankly, WeChat and Alipay brought China further into the digital revolution than anyone could imagine. And now the next generation, central bank digital currency is coming out. So frankly, I won't mince words. It blew my mind. What was happening here is so mind-blowing that I thought it was a story that had to be told. And at the same time, as I wrote the story, it just kept on getting bigger because there's just so many facets. And I already have notes for Cashless 2.0 or the modifications to the book, because in a year, much of what I wrote will be fine, but there will certainly be edits, and there's certainly aspects to it that I left out already. But in the end, my mind was simply blown by what was happening in the digital sense or digital currency sense here in China, and it continues to be blown. Look, great story. I just got back from a trip into Yunnan province, and Shangri-La, to go hiking in the mountains. And, it's really mind-blowing. You go far, far away in China, and there you're in the middle of nowhere, and there's the green symbol for WeChat or the blue symbol for Alipay. And I'm not joking. I found this at 4,000 meters. There's a little shepherd, literally a shepherd's hut, and he sold bottles of water and tea and some other things. And there it is at 4,000 meters in the middle of nowhere. It's where you least expect it, you'll find it. And that's how pervasive digital payment is in China today.
For me, it looks like China is at least 10 to 15 or even 20 years ahead of practically every other country in the world. Because here we are talking about digital payments. We talk about crypto a lot. We talk about crypto revolutionizing how payments are made. But here we have the next evolution, CBDCs, and they're already a thing in China. So for the benefit of our listeners, if you could tell us the key differences between crypto and CBDCs, because what happens is these terms are used very interchangeably, even though that's not the case. So if you could hear
it. Absolutely. Let's tackle that right up front, okay? And particularly within the crypto community, there's a lot of misinformation about what China's central bank digital currency is all about. Okay, one hand, central bank digital currency. It is in theory no different than the paper money that you have in your pocket, okay? It is issued by the central bank and it is a liability of the central bank. And then in the other hand, we have crypto, which is a broad term, but generally when we think of Bitcoin, which is the king of crypto right now, we think of a people-led movement for money, something that is backed by faith and belief of what its value should be, as opposed to the central bank saying, hey, this is worth, or central banks, plural, figuring out what the value of your currency should be. And they are in opposition to one another. So I know that CoinRepublic has a lot of fans of crypto, and I think that's great. But these are different spectrums or different ends of the digital currency universe. And by the way, up front for everybody, it's not one or the other. My belief is they're both going to get along peaceably in the long term. But what we really need to be thinking about, and this is really true, is that every CBDC, or central bank digital currency, I'll use that term a lot today, CBDC, is really a distant cousin of Bitcoin and cryptocurrency. Cryptocurrency was first, and let's make no qualms about it. And if we look at the technology for China's central bank digital currency, it borrows a lot from the crypto world. So thanks to all the crypto fans out there, crypto is changing our world. And, you don't, now for those who say, well, I really hate cryptocurrency, fine, go central bank digital currency. But here's the funny thing, it's the two sides of this coin, right? The crypto guys and the CBDC guys. Sometimes they hate each other so much that the CBDC guys don't want to give credit to the crypto people for the great work that they did in making this and showing us how digital currency can function. And the crypto guys, some of them hate CBDC so much, they disown it. They really get mad at it. I'm neutral. I love both. And I think they're both going to coexist.
So bottom line, no matter where you go, blockchain technology is supporting both crypto and CBDCs. And I think that is, yeah, right, go on.
Yeah, okay. Yes, you're right. There's I have to make one caveat in here. And the interesting thing is that when China designed its central bank digital currency, it actually doesn't run on blockchain. It uses, right? So we assume, and that's a fine assumption, that all central bank digital currencies are blockchain based. And that's absolutely a reasonable assumption. But in the case of China, because the country is so big and because the throughput requirements for transactions is so great, blockchain has a hard time with it. So when you look at central bank digital currency in China, the design spec was that it has to handle a minimum of 300,000 transactions per second. That's a really big number, and it's not something that blockchain can handle readily. Now, I know that there are fans of Ethereum 2.0 that say it can, and when Ethereum 2.0 is launched and in business, it's great, power to it. But right now, most common blockchain can't handle the throughput. And I know people will say sharding, and I know there's a lot of technical ways that you can get around that, and those are all true. But remember, central banks are not on the bleeding technology end. They need to know that the technology works well as it is. And also never forget, China started this project 7 years ago. So things like Ethereum 2.0 were not a reality.
So this brings us to my next question. So, Rich, what I want to know from you is a lot of other countries are interested in developing their CBDCs as well. You have Sweden and Russia who plan on test releasing their currency sometime at the end of this year. You also have a country like India who is developing their CBDC, actively developing it, might release it maybe a couple of years down the line. So what is the technology that we are looking at when CBDCs come into question? So like you said now, China did not use blockchain to develop their CBDC. But do you think other countries might use a blockchain-powered CBDC? And if so, what's it going to look like?
Absolutely. So look, that so many countries are following China into the CBDC universe is wonderful. And there's no race here. It's not like there's a race to be the #1 country, which happened to have been the small island of the Bahamas. So power to the Bahamas. But what you're really looking at is a technology that it can increase financial inclusion for all. And I would argue that the countries that will benefit most are those countries like India, like Bahamas, where you've got populations that do not have access to banks. Now you say, well, the Bahamas, it's tiny. Yes, it is. But it has small islands, and small islands with a small population cannot support a brick and mortar bank. That means these people are unbanked, just as many rural villages in China couldn't support a bank. So when they had access to Alipay and WeChat Pay, they finally had financial inclusion. So I love that so many countries are looking into CBDCs. I think it's great for their populations. I see this as a big step forward for financial inclusion. And as far as the technology stack they're going to use, each one of these is custom built. There's no model. There's nobody saying you have to do it this way. So each country is going to look at its needs as far as transactions per second, where it's able to put its various servers and other things spread out within the country to get that sort of speed. And they're going to come up with something that works for them. And as far as China goes, I have a caveat. I always say China's central bank digital currency is not built on blockchain, but it is designed to be carried on blockchain. So what we're seeing already is the first trials of payments, salary payments made to people on blockchain. So don't worry, blockchain is still there. It's in use in China with regard to central bank digital currency. Even if it's not built on, it will be carried on blockchain.
Great to hear that. That puts back my confidence back in blockchain. Next question, and this is perhaps a very important one because it has a lot of people concerned. So tell us, Richard, do you think the creation of the Chinese CBDC, can it pose a threat to the power of the US dollar in any way? And if so, can you explain how effective a digital currency is over fiat?
Sure. And I think the answer to that is clear. Yes, it poses central bank digital currencies overall pose a threat to the dollar, but not in the way that people might think. We have to think about how deeply embedded the dollar is in the world's financial system. So we have bonds and stocks. We have all kinds of investment products that are valued in dollars. They're not going to change tomorrow. So what we have to do is to think, well, and this is what China did. China thought real hard about, well, where is central bank digital currency going to have an impact for us? And really, it's going to be in trade, buying stuff. So China is the world's largest exporter. Countries buy lots of stuff from China. So we don't expect that your local bond or stock or other financial instrument is going to be valued in RMB anytime soon. But if you're an importer-exporter and you're buying stuff from China, these purchases can be revalued into digital RMB. And the trick that the digital RMB is going to do is that it's going to make it faster, easier, and cheaper to buy from China. So if you have a choice, you say, well, I'm going to use this country out of nowhere. I'm going to say, if you're an importer in Kenya and you're buying from China, you have a choice. You can take the local Kenyan currency, convert it to dollars, send the dollars to China, convert the Chinese dollar into RMB, right? If digital RMB can be one stop and cheaper and faster and easier, sure. Then China's trade can start to revalue in some meaningful proportion into digital RMB to further the internationalization of China's yuan or RMB. They're interchangeable, they mean the same thing, okay? So what people are missing on, when people read about digital RMB, they're often thinking this, saying, well, we don't use the RMB right now, and we don't want to use the RMB. And yeah, that's absolutely fair, but it's not just a currency. The digital RMB represents what I would call a digital entry token, all right? And that entry token is not just to using RMB, but to using China's digital logistics and digital transport systems. So we've got blockchain in China right now. We have blockchain trade systems that are very active between Hong Kong, Macau, and China, okay? And these blockchain systems allow for digital financing, digital transit through the customs process. So it's not just that you're going to say, well, I'm using money in digital RMB. You're buying this entry token, and you're not just going to use money. You're going to be buying into this digital transport system, which China really innovated. Now, okay, I live in China. When I buy stuff, it's fast, it's immediate to my house, it's 24, 48 hours, because I live in a big city where we have great speed. But if you look carefully, it's this digital logistics system that has been built out domestically that is going to go international. So the dollar, so let me go back to the original question just to make sure we're clear on this. Yes, the digital RMB poses a threat to the dollar. Not immediately. It will be a long process. It will be about 10 years before enough countries start using the digital RMB to buy from China in trade. And these trade volumes are valued so highly, they're so large, that alone will make the digital RMB, and with it the RMB, the non-digital version, a bigger actor on the world stage of currencies. So I think we're right at the foot of a tsunami or a revolution, and it's going to happen, but don't think that it's going to happen tomorrow. It's not like the digital RMB turns on and suddenly everything revives. No, you have to it's going to take time.
And could you tell us the benefits of using a digital currency over fiat? Like, what are the possible direct advantages you can think of?
Sure. Look, there's lots of advantages. Let me make it clear to people from the West, all right? So the number one reason people ask me in the West is, look, I'm looking for one right now. I don't have it. I have a credit, I have a credit card, all right? And I tap the credit card or I swipe the card and I have immediate digital payment. You do, and that's great, but there's a problem. Your merchant fees in countries like the United States are around 3%, 2% maybe in Europe, but you're paying an intermediary to transfer your money. And 2% and 3% is a lot. And if you're a vendor, so let's go back to China. In China, payment is free through WeChat and Alipay, or virtually free. There's very small charges at one part of the process, but for all practical purposes, it's free. A guy who's selling noodles on my corner here can't afford a point of sale device where you swipe or tap the card because you have to buy or rent them from a financial institution. They can't afford a cell phone. They can't afford to lose 2 or 3% on merchant costs. That's their profit margin, 2 or 3. They're working on very small amounts because China is still a developing country in a lot of ways. So this concept that you are paying an intermediary to move your money doesn't make sense anymore. We want money movement that is as immediate and free as email. And that's the real promise. And look, I give a lot of credit to the crypto guys. That was their promise. You can debate whether you like Bitcoin or not. That's really not the issue. Right. The real thing that the crypto guys, and I give them credit because I wasn't there when I'm like a traditional banking guy, right? So when crypto first came out, I'm like, what's this stuff, right? I admit that. I mean, it's better to admit our flaws, but they had that vision of immediate, direct digital payment without a third-party intermediary being paid or taking a margin or a fee on that transmission. And that's really huge. And when it came to China, there was an explosion. Small vendors who couldn't afford these point-of-sale devices for credit cards, bang, they used it immediately. And it led to a GDP boost in China. Well, nobody really knows how much, but when President Xi Jinping announced an elimination of poverty in China, abject poverty, really bad stuff. Part of the system that helped alleviate that poverty was the access to finance, the access to financial inclusion. And, that's good stuff. And not paying an intermediary is a good thing. No doubt the credit card companies in the West did a great job with their early version of digitization, but it's time to make that next step. So that's the number one reason we should all be excited about digital currencies. The concept that I have to pay for people in the West, Square. I use Square, I have to pay them 4 or 5%. When I use PayPal, I'm paying them. I look at when I transfer money with PayPal and I look at the costs, I'm shocked. Because my Western life, I use Square and PayPal. My China life, it's all free and immediate, So it's a real gap. So look, the other thing of the benefits, that's the most common benefit that people in the West can look forward to when they get central bank digital currency. And if you're listening to this and you're saying, well, I don't care, I don't know what to say. You tap and you think it's free, but the guy who's selling you the coffee, the vendor who's selling you is getting a 3% hit, which you pay for. It's not free. You're paying that extra 3 or 4%. And if you add up your credit card bills and take away 3%, and you could put that in your pocket, that would be good money for most of us. Clearly, there's advantages to taxation because you know where the money is. And clearly, there's less fraud with the system. There's a lot of advantages other than that. But I think that's the number one thing that people from the West have to really consider. And to consider that the costs are not marginal. They're real, and you're paying them. And why should you?
Which brings us to the biggest question, perhaps. This is the question I've been looking forward to the most, Rich. Why do you think China did this incredible revolution years ahead of the West? Right now, the CBDC is out, like you're saying, it's transitioning itself into the blockchain. But there you have the West, you have US, who has openly declared that they are not developing a CBDC at any point. So what has led to this huge difference?
Okay. That is a great question. And that really gets to the heart of what's going on in China. And you have to go back. All right. China has these things called 5-year plans, okay? And you have to go back to, we're on the 14th, 13, 12, the 12th, I think it's the 12th 5-year plan. And there was the realization that with 1.4 billion people, the only way the government could provide services was through digital. So what the government did on it, it's 11th or 12th, it's in my book, and which 5-year plan escapes me now, but what they did was they had an active policy of putting 3G at the time into all of the small villages. So when I told you the story before, that I was at 4,000 meters and I had signal, I did. I had 3G signal. It was slow, but it worked. But it really goes to the heart of the government's belief that digital was the best way to reach such a vast populace with services. And particularly, what eventually happened was banking services. Now we've got a couple of years later, after all of these small villages are wired up, 2014, we've got WeChat Pay and Alipay launching. And that was the next brick in the wall. Okay, so the first thing is you need the villages to be wired up, and that happened 2010, 9, 10, and 11, basically. by 2014, the next big step. And that was the People's Bank of China gave digital banking licenses to big tech. The perception was that we can't reach our populace with financial services. We can't build enough banks. You just can't with this big a population so spread out. So the People's Bank of China gave five licenses. I can only remember four. They gave licenses to the big tech players. Ready? Tencent, which is the WeChat parent company. Okay, they gave them a digital banking license. Alibaba, of course, they gave a digital banking license to. The next one is Baidu, which is the Google equivalent search engine here. And the fourth one was given to Suning, which is not a household name, but Suning is the largest chain of electronic stores all throughout China, massive electronic store. And there's one more, and it just escapes me at the moment. But just imagine for a moment if you gave Google a banking license, Amazon a banking license, and Facebook a banking license. And now ready for it. This is the part that really should shock you, because this is beyond imagination. You're the People's Bank of China, the central bank. You give them banking licenses with the full expectation that there will be a cost to state banks. So just imagine for a moment, because it's funny, think about the Federal Reserve actually giving banking licenses or doing something that would impact JP Morgan or any of the big banks in the West. You're like, oh, come on, they're never going to do that, right? But that really is what changed. So what China did was twofold, to summarize. First was the complete digitization of the country by putting 3G in the early days in all of the small villages, and then giving these banking licenses. And those were the two fundamental factors that changed China forever and made it go cashless.
Here's a question, Rich. Here's a big question. What was the view of the banks? Like, did they protest? Did they say something? Like, how did that entire thing play out?
That's a really good question. And the funny answer is that, yes, the banks, of course, were not thrilled with the granting of private banking licenses, but they knew it was inevitable. These are state-run banks. So China was well on its way toward privatizing many different businesses, open market, free market capitalism was well underway then. So they knew that it was going to happen. What no one knew, the People's Bank didn't know, WeChat Pay, Alipay, no one dreamed that it would explode the way it did. Look, if you ask people, I lived in China in 2010. I got here in 2010. Okay. When I had to pay for my department security deposits, I had to go to the bank with a small backpack. And I would actually get the largest banknote in China is 100 RMB, which is roughly $14, $15. I can't remember. I would get a backpack full of bricks of cash. And that would be my security deposit, pre-Alipay and WeChat Pay. So everyone knew that there was a pent-up demand for better services that didn't require handling of cash. Credit card networks were not as well distributed in China because there's a cost to using them, and many small vendors simply don't want to pay the cost or cannot afford the machines.
But isn't there a risk, Rich? Let's say the guy you mentioned who sells noodles just beside your house. Since you mentioned the currency denomination, I can figure out he also must be he must have a big backpack full of currency notes where he is working. So isn't that risky? What if someone comes and takes all the cash away?
Absolutely. And I can't remember the statistic off the top of my head, but petty crime or I'm not sure if I should call it nonviolent, petty, I'm not sure the exact term, but crime where you steal cash, okay, plummeted in China. Because yes, back in 2010, when I got here, it was very common to have people steal from the store. Here, I'm going to rob you. Okay. Guess what? If you took away the cash, the crime statistics literally plummeted because nobody had cash anymore. So it was really kind of funny, because a wonderful side effect of digital currency or digital going cashless was that there was a lot less robbery, because nobody has anything to steal. I don't have any money in my pocket. I can walk, and most cab drivers, vendors, or other people in the big cities, there's nothing to steal anymore. Oh, what are you going to steal? My phone? Well, go ahead, steal the phone. It's got biometric identification. You can't do anything with it.
It almost sounds like utopia. Is it utopia, Rich?
Okay. No, okay, look. If I say utopia with regard to China, my listeners are going to flip out. So let's separate. China is not utopia. It is a wonderful country. If it wasn't wonderful, I wouldn't live here for 11 years. It's great. Utopia, no. Is it utopia specifically with regarding payment system?
Yep.
Absolutely. It is utopia, because I can pay anyone, any service. I have super apps that put all of these bill payment or services that I consume, they're all on either the Alipay or the WeChat Pay app. And that is utopia, because, look, great story, right? I've been in China for a long time, but I still have bills to pay in the United States, all right? So we arrive with COVID, nobody can go to the bank. And I'm calling my brother, and I said, look, I have a joint account with my brother. And I said, look, you got to pay these bills for me. And he's like, I can't go to the bank. There's no way to pay them. So I go to use the famed US payment system Zelle, Zelle. And I'm laughing because it's so far behind WeChat and Alipay that, yes, it worked. Yes, I managed to pay whatever I had to pay. That's the good news. But it was certainly a more complicated process than I would have liked. And yeah. So you said before, you said China is many years ahead. I generally peg it at about 10 years. And the reason, I think that's conservative. And the reason why I only say 10 years is because stuff changes so fast now that I don't know how, that when you start saying anything beyond 10 years, it's almost incomprehensible for anyone to think that far out now, right?
Right.
But is it utopia? Yes, because look, let me give you the best example. I now have platform services on my phone, and virtually any service that I want with money is available to me. So I theoretically now, look, I am a foreigner living in China. I do not have access to the full spectrum, so I can't buy stocks, but on my app, I can manage my money. I can buy insurance. I can do any of the financial services all in one place. And ready? I have what I call hypermobility of my money. Okay. Meaning that it's my money. I have freedom to do whatever I want with that money and put it and place it wherever I want to. And I am not asking, do they accept this credit card? Am I paying the 3% on the credit card? Do I have to get Zelle? Remember Zelle? All right. So do I have to get the payment approved on Zelle because it's the first time it's ever gone through and they reject it 3 times? So the concept of hypermobility of money is tremendously liberating. we are dependent on third parties for money transfer. And it works. The system is good. I'm not saying it's horrible, but the concept of a super app, the concept of finance that is embedded into a platform, a digital platform, it's a wonderful life. It really works. And I'm living that future now in China. And one more thing, just to pound this in, financial inclusion. What's available to me for immediate small money market type investments is available to the person in the smallest village in China. You know, you don't have to open a brokerage account. You don't have, you're not. So it is transformational, and it's pretty close to utopia when it comes to having access and the ability to move your money around where you want it to move and for free. It's mind-blowing. And that's at one point, that's what really hit me and moved me to write the book. I understand that Chinese systems are not for everyone. Your country, wherever you are and wherever you're listening, your country will make new and different systems that are in line with what your beliefs of privacy or what your country, your nation's beliefs of privacy should be. And by the way, I'll tell you right in advance, spoiler alert, most nations' concept of privacy isn't that much different than China's. But you will have access to this future, and you should look forward to it. It's a great future to live in.
Earlier in the interview, you made the statement that crypto and CBDCs can coexist aside from each other, like they're not competition to each other. But in China, we have seen for the last couple of years that the Chinese government has been going hard on cryptocurrencies. It stopped crypto mining in multiple locations. It's prevented any sort of financials related to Bitcoins or crypto from occurring. And of course, the spotlight is on their CBDC. So can you tell us about what the Chinese government might be thinking at this point? Their motivation to ban crypto and push ahead their CBDC?
Sure. There's a lot there to unpack. First of all, China's position is clear. They believe that there is one and only one currency that is valid within China for payment use, and that is the Chinese RMB. In fact, that's a building block. They had three fundamental building blocks when they were building the central bank digital currency. And their architecture is that there is one coin, and that coin is the RMB. So clearly, if we look back in 2013, which is when the first bans on crypto started in China, there is the clear desire to control the currency and to say that the legal currency in this country is RMB and no other. And for those of us who are fans of crypto, Binance, the early exchanges, many of them migrated out of China in 2013, and the rest is history. They exploded. They became huge multi-billion-dollar companies to their credit. So, concept of one coin, paramount. Two, because China is a developing country, like many other developing countries, we have currency controls. That's not news to anybody who lives in the developing world. So China has currency controls, and clearly crypto presents a threat to those controls because people convert to crypto, move it offshore without using the banking system. And that's problem number two, money smuggling. So clearly, the Chinese government is trying to avert money smuggling. And the third thing that is sort of perhaps not in order, but something worthy of mentioning that's a big thing, is that Chinese investors love volatility. So, okay, the rest of the world thinks of Bitcoin's volatility as its Achilles heel. It's a disaster because it's so volatile. Chinese investors see the volatility from a different perspective. They think, wow, I can make 20% in 2 days. That's great. Now, let me explain. And there was a great article in Harvard Business Review about this a while ago, and it just nailed it. And the article was the 3 things people get wrong about China. And because China's history is so volatile, investors tend to discount long-term gains. So if you tell an investor here, this is a great bet, it's going to be good in 15 years or 10 years, they look at you and their thought is that 10 years is so far out. They devalue that gain. If you tell them this stock is going to the moon next week, they're like, this is great. So to a certain degree, Chinese investors love volatility or are more comfortable with it. I don't, perhaps love is too strong, but are comfortable with that volatility. And they see cryptocurrency as a way to make money relatively quickly. Now, the government, to its credit, says, look, we are generally concerned for the social fabric, that people will invest in this and lose their money. So the recent crackdown that people saw, about a month ago, there was a big Reuters article that said, basically it said, China's cracking down on crypto, banks can't touch it. That was actually, the headline was wrong, because that had already happened in 2013 and in 17 by laws in those prior dates.
Right.
But what the government said in its announcement was really pretty practical. It said, look, this is a public service announcement. We are concerned. Many Chinese people are buying this. We're concerned you're going to lose your money. And if you lose your money, there is no recourse. And for a country that has a lot of poor people, yes, China has a tremendous large number of millionaires now, more than the United States. That's true. But with 1.4 billion, the majority of the population is very humble. And the government said, look, please don't lose your money with this stuff. We're really concerned because we see the buying patterns. So to summarize, the government certainly, their position with regard to crypto is that while they legally allow you to own it, there's no question, you are legally allowed to own it. The government's position is that there is one coin in China, that's the RMB. That's the only way to pay for stuff legally. 2, they certainly don't want to crack down on illegal currency movement across borders, which is, I don't think that's any surprise that crypto is used for that. We all know a lot about that already. And the third one is they don't want their population to get slammed with, a 30% up or down a loss. Even if their society is, how shall I say, wants to make a quick buck and thinks that just might be the ticket. I can make 20%. That's great. I'll take the money. So those are the 3 reasons the Chinese government has difficulty with crypto. And we just saw this last weekend, Sichuan, the province of Sichuan, which is one of the biggest mining provinces, there's a 20% decrease in hash rate over the weekend that we're recording this. So yeah, they're coming on hard on crypto right now. That's the government policy here.
What are your thoughts regarding El Salvador? Because here we have crypto putting a crackdown, and here we have El Salvador legally accepting it as a legal tender. Now, of course, both countries are completely different when it comes to demographics, when it comes to their financial situation. So we have to take that into account. But just taking them on paper, one against the other, do you think El Salvador's announcement is going to maybe bring Bitcoin a bit closer to financial inclusion for other countries as well as the years go?
It's a great question, and it's very hard for me. Look, I love the vision. I love the white paper. Satoshi's white paper is different from reality. Okay, so the concept of bringing financial inclusion to people through digital currencies, whether they're CBDC or crypto, love it. Absolutely. But when you say financial inclusion and the asset is good jumping up and down by 20 or 30%, if your eggs cost 20 or 30% more this week or last week, poor people can't afford that. So, that's problematic. So give me a stable coin. And then great, so does El Salvador's acceptance of Bitcoin assist Bitcoin with its greater mission of being relevant and greater acceptance? Absolutely. Was the World Bank's refusal to acknowledge or lend help predictable? Sure. If there was ever an organization that wanted the status quo, it would be the World Bank, right? So, when I read the news, like you, I thought it was hilarious. I'm reading it, and I'm like, yeah, well, who couldn't have predicted that? So the answer is, for many developing countries, saving in Bitcoin may be superior to inferior local currencies. It just might be. I don't, El Salvador is one of many. I really don't know how volatile or how debased or good or bad the currency of El Salvador is. I'm sorry.
So El Salvador uses US dollars for all purposes. They technically don't really use much of a currency.
Okay. So, look, it de-dollarizes them. That's good in some aspects because it gives them greater ability to diversify away. And that's fundamentally good. But specifically on financial inclusion, it's really hard for people. The most fragile groups of people are the poor, and they cannot afford volatility. So if El Salvador was to say, I would accept a stable coin, you take your pick, dollar-based stable coin, I'd be more excited about that in some ways because I just don't think people can afford the ups and downs right now. And, rich people can. You're a guy living in the United States and you watch your crypto account go up and down. Yes, you have some tears, but you still eat. And poor people, and this is China's experience as well. There are just tremendously large, very, very vulnerable groups of people here, and they certainly cannot afford food price increases, and that's a big thing in China right now because they just had the pork virus that swept through the pig population here. The pork prices went up, and that really hurt a lot of vulnerable families. So is that too long? But basically, conceptually, I like it. Practically, I don't see it helping a very poor, vulnerable person living in El Salvador. Do you? Am I? What do you think on that? Because I'm open on this one.
No, I share similar things. So the thing is, El Salvador's economy runs on remittances. So a lot of the population live abroad and they send money home to El Salvador, which is why the currency used there is USD. So the practical purpose in this one is that you take care of the fees, the remittance fees. If you can transfer over Bitcoin, it's much cheaper. But then I also think of it partly as a publicity move, where El Salvador is trying to attract foreign investments from a lot of countries, because since they made it legal tender, there is no taxation on any Bitcoin profits made. So this is also a great move to include El Salvador, because let's face it, before this announcement, how many of us actually knew about El Salvador? But ever since they made this announcement, all of a sudden it's all over newspapers, everyone's talking about it. There's a huge debate going on from both the sides. So like all human concepts, I believe there is also a publicity factor to it. It's almost like a stunt.
Look, if Bitcoin can lower the cost of remittances into El Salvador, and yes, and look, I admit this all happened when I was on holiday, so I haven't had a lot of process time. If it's legal currency and there's no taxation on it, and it helps people to bring their money in, and the important part for most people to who are not crypto friendly to understand is you can get in and out within a matter of 20 minutes. It's a relatively fast, well, maybe a little longer, but it's a relatively fast. If they can save money and don't have to use Western Union, God bless them.
Yeah.
I mean, look, that's at some level, this is the dream of digital currency, is the ability of you to transfer that currency without a third party and without the costs. And if you look at the costs for remittances, not just dollar to El Salvador, another great one in my region is Hong Kong into the Philippines. We are taking money away from the most vulnerable people. And I know I sound like a dreamer now, but that's fundamentally wrong, And when I look at my own charges to send money either direction, I'm stunned at how much it costs me. It bugs me. So, and I will still eat when I pay those charges.
But a lot of people can't.
A lot of people can't. And if you don't have a heart, and if you're not thinking that this is potentially good for some, what are you thinking? These are our most vulnerable people. We need them to eat. We need them to grow. And if Bitcoin can help in some small way in El Salvador, God bless them. I think it's great. I'm a pragmatist.
Because you see countries like Nigeria as well, where the currency keeps playing games with the people. Yeah, it's a very there's hyperinflation in Nigeria at the moment. But what a lot of the people have done is they've invested into Bitcoin, because let's face it, Bitcoin's volatility is not as severe as the inflation in their country's currency. So we do see, yeah, go on.
Yeah, please. Look, I write about that in Cashless, because there is a real risk that for certain countries, that if China's central bank digital currency is available beyond commercial use for trade, you can destabilize these countries because people will choose to hold a different currency. They'll hold China's EU1, or they'll hold Bitcoin. So yeah, I get it. And there's sort of a mixed blessing here, because the more money that flows out in another currency, the less stable these currencies become, which is bad for everybody. All right. So one of the things that China has to be very aware of is, you just can't say, okay, whatever country, here's the digital yuan, go ahead, use it, because you really do risk this destabilization. But the funny thing is, I laugh because I made the same point than you do in the book. People are saying, people from the West are like, the RMB is a terrible currency. Who wants to use that? And I'm like, terrible relative to what? There are lots of places where the RMB is a great currency. And there's lots of places where this step from local currency into dollars is really expensive. And then you're going to swap dollars for RMB. There's no currency, there's no natural currency pair. So yeah, digital RMB will be just great for a lot of places. And if it's legal and if it's backed by a country, wow, that's a home run, or that's a really big thing for many countries. And I laugh because the West, the Western media, they're like, well, who wants the RMB? Well, let me tell you, a lot of countries would love the RMB, and you're right. The same with Bitcoin. So people with stable currencies tend to think, oh, well, who wants Bitcoin? Well, yeah, a lot of people want Bitcoin. A lot of people want RMB because relative to what they've got, it's a good deal. So sure.
Definitely. Final question for this session. I know it's been a long one, but then it's been a really fun one as well. So concluding everything, all that we have spoken, when can we expect your next book, Rich? And what is it going to be on?
Oh, please. I'm still recovering from the last book. You know, so just like a couple of quick stories here. So look, this book, Cashless, ready? Here we go. There's Cashless. I'm going to put it up on the screen again. All right. So look, Cashless was funny because I got about 80 or 90% done writing, and boom, all sorts of new announcements from PBOC and other developments in the market that made me like rewrite 30% of the book. So whenever you write about China, it's hard. So the next book will be probably, I think that I will do an update to Cashless probably within 18 months. And I already have a list of chapters that need to go in there. And really one of the most important chapters that I didn't put in there that I regret now is the use of central bank digital currency for developing economies.
I think that's a great one.
Just a quick one for you. Clearly, the United States, which rules the currency platform of the planet, has a tremendous risk to digitizing its currency. Look at the Bahamas. They have they have nothing to lose by digitizing their currency, and through financial inclusion, everything to gain. So you really have to think about this. And I know it's like, there's a lot of stuff about CBDC, destabilizing the banking system. No, that's BS. We'll go back to that another time when there's more time. But for developing economies, CBDC represents a path to financial inclusion that can fundamentally alter their countries with minimum actual risk. You say, well, they'll inflate their currency or overprint. They can do that with cash now. There's no developing countries. You don't need central bank digital currency to do that. If they really want to do it, fine, let them print cash. But I think one of the things that we're seeing now is that many developing countries are looking at CBDC. I think it's great. And the next addition to Cashless will be a couple of chapters, or at least a longest chapter on that and a few other things. The next actual book, I predict that in 2 years, we're going to launch central bank digital currency in China. There is a research center currently in Xi'an, China, that is looking at 70,000 new uses for central bank digital currency.
That's huge.
Think about it. So what people are missing is that they see central bank digital currency simply as a cash replacement. No, it's so much more. There are so many new innovations that are going to come out of this. That 70,000 number is massive, and it's wonderful. So central bank digital currency is a door to a new universe, a new world, where we have freer ability to access and use our money, hypermobility. And that innovation process will be the foundation of book 2, figure 2.5 years. So let's give it a while. Let's let some of them happen.
Great, then. Thank you so much for coming on the show, Rich. I had a lot of fun asking you these questions. I myself have got a great insight into CBDCs now, and I'm sure our listeners as well will maybe walk home with a slightly different perception than what they had. Thank you very much.
Thank you so much for having me. It's a pleasure to meet with you and to meet all your audience out there. Connect with me on LinkedIn and on Twitter, please.
Great.